It happened with little fanfare, with virtually no reporting by the mainstream press. But this development signaled that one of the biggest gold buying entities sees a growing need to own gold right now. That's the first paragraph of a brand new article that Jeff Clark, our senior precious metals analyst at goldsilver.com, just came out with, titled, "These Gold Investors Got Your Back, Jack." And I've got Jeff on the line with me. How are you doing, Jeff?
I'm doing good, Mike, and it's great to be back with you again.
It's great to talk with you again. So this article talks about central bank buying. And this is one of the things that people are sort of ignoring. And, it's interesting that gold and silver are down at these low prices right now. And, that is because of all the paper gold and silver on the commodities exchanges. But with all the buying and delivering, it really should be much higher than this. And that just makes it an opportunity. In the next video or two, we're going to discuss how big this can be. This article, though, Bye-bye Central Bank Gold Agreement. Most people don't know that there was a central bank gold agreement that was renewed every so often. The article is about this, and they've all stopped their sales. The agreement was to limit the amount of sales that central banks could do. Am I correct?
That's right. So gold was in a bear market for, 20 years for most of that time. And a lot of banks were selling, and that was sometimes depressing the price. So they all got together. Most of these central banks were in Europe, but they all got together and agreed that, okay, let's limit how many sales we can, total sales per year, as well as how much each of us can sell, so that we don't push the price down too much and avoid devaluing the gold that we each are keeping in our reserves. So they came up with this agreement back in 1999. They all signed it. There was 21 banks total, and they all signed it and said, hey, that we're going to limit how much gold we sell per year amongst all of us and amongst us individually. So they did that, and they re-signed the agreement every 5 years. They would renew it. Mm-hmm. 2004, 2009, 2014. Well, the new one came up to be signed here September 26th, last month in 2019, and they didn't renew it. They jointly decided not to renew the agreement. The reason being is that they're not selling anymore. They're actually buying. So if you look at that chart that we did, gold sales during central bank gold agreements, you'll see every 5 years, the agreement, they were selling a lot from 2000 to 2004, from 2005 to 2009. And then you can see that sales really dried up in the third agreement and were virtually non-existent in the fourth agreement. So
I find it just absolutely amazing, central banks agreeing not to sell too much because we've been selling too much. So they agree to limit their sales. And this chart starts in 2000 when gold was bottoming. And so it's rising during this each one of these agreements, 1, 2, and 3, gold is rising dramatically. In fact, Gordon Brown, the bottom in the gold market back in the year 2000, is referred to as Brown's bottom sometimes because the Prime Minister of England, Gordon Brown, England sold off half of their gold reserves. And was it 2000 or was it 99, 2000 or 2001 that they sold?
Yeah, I don't think I know the exact year either, but there is Brown's bottom, and it was right around there. And
he couldn't have picked a lower point, a lower price to sell their gold at, and it was half of the Bank of England reserves.
That's right. He was selling most of their gold at the very bottom of the price trough. So there's a lesson in there, I'm sure. So
yeah, well, the stupidity of central banks selling all this gold. I mean, this is measured in tons, and so you've got 400 tons or greater annually, all the way up to 2007. That is a lot of gold, and they sold that in 2007, I think, wasn't gold hitting like $600-700 an ounce back then?
Right,
It hit
right.
1100 before the 2008 crash, which took it back down below 8 temporarily. But then it ran up to 1900. And so, they figured out during this period of time, too, the next chart that you show is central bank gold reserves. So it's their holdings. And you see it being reduced. They started, central banks were selling going all the way back to 1989, and they didn't stop selling. In 2007 is when the banks in this gold agreement started to figure out that, wait a minute, other central banks are starting to buy. So we're selling and they're buying. And that's when, after 2008, the central bank sales start to fall. And basically, it sort of hit zero by 2012. And you can see in your world gold reserves chart that from 2007 to 2012, it was rising pretty dramatically. And it's been rising ever since. Well, now, where are they getting their gold from? They're getting it from the market, right? This is coming from mining companies and so on, and from exchanges. So instead of getting it from other central banks, as these central banks increase their holdings, it's going to affect the price, and that's the point of your article, right?
Yeah, that's the point. And that chart does show not just the central bank gold agreement signatory banks, but all global central banks around the world. So, and you can
Yeah, the
see
second chart.
that it's been rising. They've been buying now for 11 years, and it will be 12 years in a row this year because they've already bought more than 400 tons year to date, which is the fastest pace of accumulation since 2015, as the chart will show if you look closely at it. So the point of this is that central banks are buying, and that lends support to the price.
For people listening to this, when they look at the second chart, the gold reserves, this is the total holdings. So when you're talking about buying, it's the difference of how much higher one year is than the previous year. So whenever you see that line climb, the difference is the amount that they purchased. And so you're saying that the amount that they purchased is on schedule to exceed the fastest accumulation during this whole buying spree. So we could see a huge step.
That's right. That's right. And that has an important implication because they obviously see an increasing need to buy and own gold, but their amount of buying is a lot, and that can affect the price. And so that's why I titled this article "They've Got Your Back, Jack," because they really do. That they're going to provide support to the gold price. And the
Mhm.
message here is that they obviously see a continuing need to do so. And all of this corresponds, Mike, to the changes in Basel III that we saw earlier this year in March. Gold
Yeah, the
was
Basel III
officially.
Accord. So this is the Bank for International Settlements setting the rules that all banks globally have to play by, right?
That's right. It's how you classify and treat an asset. It's how you view an asset. And gold was officially moved to a tier one asset, which basically means zero risk. And you and I have felt that way, obviously, for a long time. But finally,
Right.
the banking community has acknowledged that they don't view gold as something of lesser value. They would count the price of gold, the value of the gold in full, 100% zero risk,
Yeah.
in central bank holdings and official reserves. So
So
that was an important step too.
before March 29th, they were considering it a tier three asset, which means, if they were going to use it as collateral or something, they basically could only use 50% of its value. On the books, basically, the value of it, as far as using it to back something or to use as collateral, they could only rate that as 50% of the real value of the asset. Now it's rated as 100%, and it's tier one is where cash is. So they're rating it as riskless as holding cash.
That's correct. And then you'll notice that we can't really talk about central bank gold buying without pointing out what China and Russia are doing, because those two banks have just been on a complete spree. And I don't think that's going to let up because Russian President Putin just signed a law eliminating the VAT tax on investments in gold and other precious metals. So he's eliminated that. Their newspaper reported that they foresee an additional 50 tons of gold being bought per year. And then when it comes to China, they've officially added to their gold reserves 9 months in a row now through August. But as you've pointed out before, that's what they've reported. We know that they've been buying every month and accumulating. They just reported the buying for 9 months in a row now, because we think that they own a lot more gold than they're actually reporting.
They used to keep their purchases secret, and then every once in a while they would announce a huge, that their actual holdings were this size, not what they were telling people before. So you would get to see what they had purchased over the last several years. And I think that now they're reporting every month because they're trying to be more legitimate when it comes to the way the IMF and the Bank for International Settlements and so on sees them, because they want their currency to be a reserve currency. They want respect for the Chinese renminbi, and to do that, you got to play by certain rules, and that means regular reporting of the real facts. Not they used to do a lot of stuff in secret, and now they're reporting every month what they're doing.
So. Right. And so that's the reason behind why they're doing that. I totally agree with that. Yeah. So the point to all of this is, Mike, I think I wanted our constituency to make sure that they're aware of this, that, the CBGA agreements is dead. They're not selling, they're buying. And what that basically signals to us as gold investors is, like I say at the end of that article, the era of central bank gold sales is officially dead. The age of central banks as gold buyers has returned, and that has implications for all of us. They're going to offer support to the price, and we should follow their lead.
Right. They know what's coming. That's the reason that China and Russia are getting ready for it. What I do like in the way that you close the article is you say that we can be our own central banks too. Just make gold a tier 1 asset in your portfolio. That makes they're doing it. It's a tier 1 asset now. And it's, that's what I've been doing also is to make gold and silver, especially silver right now, because it's so cheap in comparison to gold, my tier 1 asset. So anything else you want to add before we close?
No, just that this signals it is official. We're in the era of central banks as gold buyers, and I think we should follow their lead, Mike.
I do too. Thanks a lot. So if our viewers got anything from this, please like it, share it, subscribe to our channel, click that little notification bell, and we'll see you next time. Thank you very much.